the problems are getting larger, right? I mean, the GFC was a problem. COVID was a bigger problem. I think the next one's going to be even bigger still, and that's why I titled the book The Big Print. I mean, we've had two big prints. We had one in '08, and we had one in 2020. And we're going to have to keep having them. And the reason for that, it's just math. If you grow the debt faster than you grow the underlying GDP, eventually the GDP can't support the debt. And either the debt collapses in a depression-like scenario, or you print more money to keep the whole thing going. And historically, of course, what they've always done is they printed more money. And I believe they'll do that again, because even as bad as inflation is, it looks better than the whole thing collapsing. So the politicians will choose inflation over collapse.
Hello guys, welcome once again to BitCorner podcast. Today, this episode is going to be very deep. So we're going to discuss an amazing topic today. I think this person doesn't need, if you're a Bitcoiner, I think this person doesn't need any introduction. But today we're going to talk about the big print. So I have told you that the past seasons, we have focused on bringing Bitcoin 101, right? So if you have been here with us, if you're a Salvadorian, you have learned the basics and more than the basics so far now about Bitcoin. But now it's time to have deeper conversations, right? That's why we have had like Roger Juan or Pierre Rochard, all these people that have a broader expertise about what's going on in the world, right? And today, luckily, and I'm very grateful that Lawrence Lepard is here. So welcome.
Hey, nice to be with you, Juan. I look forward to having our conversation.
So your book is deep in the sense that I'm going to make a brief context for the people before we're starting recording this. I think I'm going to summarize this as I wish I had this book when I was studying engineering, because when I learned about microeconomics and microeconomics, we never learned about Keynesian or Austrian economics or any kind of economics. They were more like history, but very briefly. But what I learned in those classes were like, this is how you can manage your debt. There's inflation, so this is how you can work with it, or how you can make loans in order to have your own business. But this is not the kind of things that we need to learn. And I wish I had that book, because you explained the history of the US, why inflation is a problem, there's a lot of bubbles, and why the big print is coming, right? So I'm really grateful as a Bitcoiner, as a reader, that you made this book.
Well, thank you very much. Yeah, no, I tried to make it a book that anyone could read and understand, so that, it's interesting, because I don't think a lot of people really understand the monetary system. It's not what most people think about. They just go do their job and live their life, and yet they see that the prices are always going up, and they go to the grocery store.
Ask why.
And they don't ask why, or if they listen to the politicians tell you it's the greedy corporations, and that's really not what it is. It's the central banks and the government.
Absolutely. So could you give us some context? And I know I'm going to open a deep rabbit hole here, but what were the key events that lead us to where we are right now here in the system and the monetary history?
Well, there's so many, and the book lays them out in a time frame. I mean, I would have to say probably the largest event, there were many, but one of the largest events was Nixon breaking the gold standard in 1971, because if you look in the book, there's a chart that shows the history of inflation in the United States from its founding until 71. And while it was somewhat inflationary during wars, in general, we did not have runaway inflation until 1971. And when we severed the link between the dollar and gold, that started an inflationary world that we now live in. There were times before that. There was the formation of the Fed and Civil War, printing greenbacks and things like that. But the big one was Nixon going off the gold standard. And then, Paul Volcker raised rates in the late 70s and got inflation back under control, and a lot of technology came in and helped out. And then, China brought in a lot of low-cost labor. And so we had some things that caused inflation to wax and wane over that whole period. But in general, the trend was strongly up. And, it's just gotten worse. And now it's gotten really bad, I think, as most people know, because they go to the supermarket and, in the COVID example, they printed 40% of the money supply in under 2 years. And that just caused, grocery prices to just kind of go through the roof. and everybody's suffering. I think everyone's now aware of the problem. I mean, those of us who were in the sound money community, kind of gold people before Bitcoin, we were always aware of the problem, but there weren't very many of us and nobody was listening. And now the problem's gotten worse, and so more people are listening.
Yeah, absolutely. I also saw that you also mentioned all the bubbles that had been, right? Like
Well,
the dot-com bubble.
the dot-com bubble, and then the housing bubble, and then now I think what we're in is what I call the everything bubble. And these bubbles get formed because the price of money gets set at the wrong level by the Federal Reserve. I mean, after the dot-com bubble burst, the Fed took the rates down to 1% in order to try and stoke a housing bubble. They even said, Greenspan went out and said, use the equity in your home as a HELOC, home equity line of credit. I mean, it was nuts, right? And then, then the housing bubble burst and they took them down to zero again, and that, set off a bubble in stocks and bonds and everything else. And then I think we're in the process of that bubble bursting right now.
And why it is like an everything bubble? Because I think the GFC was focused primarily on the houses, right? But now,
correct, yeah. The GFC was the houses and the banks and the leverage in the housing market. I mean, before that, the dot-coms was technology and all the excitement around, the internet. The everything bubble was just kind of everything. I mean, they made money free from 2008 until 2015 with this thing called ZIRP, zero interest rate policy. And when you have zero interest rate policy, people can borrow for no cost and then buy things to yield return. Well, they do. And so what you see is it pushes the price of all those things up a lot. And so stocks took off, and housing prices again kind of took off, and bonds took off, and so on and so forth. And so the prices are not real. They're fake because the cost of the money was fake. And of course they started trying to raise rates in 2015, but they didn't get too far. And in 2019 they had to pivot. And then of course COVID came along and they had to took rates back down to zero again for another couple of years, 3 years. It's a real problem. The Federal Reserve and all the central banks, but principally the Federal Reserve, because they're the leader. They've really broken the monetary system. I think the title of Lynn Alden's book, Broken Money, it's a great title because that really is what's going on. The monetary system is broken. Sadly, most people don't understand that. And that was my writing this book, and the way I wrote it and the stories and I told it was to try to help everyday people to understand what's going on. That's the issue.
Absolutely. Actually, that's one thing that I want to ask you. That do you think that people are actually now like waking up and see the flaws of the system?
Because I do, but I think we're still in the early days of that waking up. I mean, obviously most Bitcoiners have woken up, but I don't know what percentage of the world are Bitcoiners. 1, 2, 3. I mean, it's certainly not 10.
Because what I see is that. What I see is that when a major crisis happened, what I have seen is that people like probably wake up, but in the end, the people just argue and complain and make upsets about the system, right? But the anger passes after
right.
I don't know a fix.
Well, that's right. I mean,
so that's why I
was kind of driven to write the book because I saw, the blue team in the United States and the red team fighting with each other, and I thought, gosh, you guys are missing the main point. You're arguing over things that aren't important. And so, most people, it's subtle, this monetary stuff, and most people don't understand it. And that's why I wrote the book, to try and help people to understand it. So, yeah, it's easy to overlook it. But you asked earlier how many people are figuring it out. Well, people are figuring it out. I mean, I'll give you an example in the U.S. you're probably not aware of. The big retail store, Costco, announced a few years ago they're going to start selling gold bars in their stores, and they have been. And the history is that every time they get a new shipment, they sell out very quickly. There's a part of the population that's kind of becoming aware of the fact that something's wrong with the money. You can see it. I mean, there are a lot of people. There are a lot fewer Bitcoiners than there are gold bugs. Gold has been out there longer. It's more widely distributed, and I think it's very interesting what's going on with the gold price right now. As most people who are paying attention would notice, it's up 60% in a year, and it very rarely does that. And so, to me, that's happening because more and more people are waking up to the issue that we're talking about, the broken monetary system. And in a broken monetary system, what you need to do is buy assets that the government can't print. And there are really 2 or 3 that fall into that. I mean, real estate's the fourth one, but the big monetary ones that fall into that bucket are gold, silver, and Bitcoin.
Absolutely. Another thing that I want to ask you, because you mentioned, and I think you focus on the book about this, and is inflation. Why do you think inflation is treated as normal? Because I don't know. Why do you think that that lie has been so easy to sell to the public?
Yeah, well, it's just because, the Keynesians kind of got control of the economic system and they've controlled the narrative. And the Keynesian model says growth is the thing we should worry about, when in reality what we should worry about is efficiency. And they measure growth by, the top line gets bigger, and one way to make the top line bigger is to push prices up so you get growth. So they're kind of focusing on the wrong measurement metric, and whenever you measure, what you measure for is what you get. They've even gotten to the point, the Federal Reserve's original charter said not original charter, but the charter they amended it to in 78 said stable prices and full employment. That was what they call their dual mandate. I don't know about you, but I think stable in prices would mean zero inflation. But they've defined it, and they've even said it. They've got papers out that defend it. They've said, well, no, we have to have 2%. A little bit of inflation is good. And their theory is that if you don't have a little bit of inflation, we risk falling back into the great, deflationary depression. And they use the depression as a catch-all to cite the fear of that and say, we can't have that happen. We've got to print money. We've got to keep the system growing, or else we're going to have a depression. And that's just not true. It's just completely not true. But, it's a sophisticated argument, and one has to be sophisticated and look at the history, and the book does, to counter the argument and say, no, you guys are wrong about this. You're just plain wrong.
Mm-hmm.
There were times, if you look at the United States from 1789 to 1913, other than the wars, there was very, very little inflation. And the economy did quite well. The economy grew very quickly, and, living standards, think about how much the living standards improved during that time frame. And that was all on a gold standard. And yet, these Keynesians, these modern day, monetary wizards, they demonize the gold standard as being this evil thing that caused the depression, which it didn't, which is untrue. And the reason, I guess the thing that people need to come to understand, and I tried to point this out in the book, the reason they do this is that it serves their interests. They want to be, it helps government, it helps the Federal Reserve, it helps the financial players. There's a segment of society that actually knows how to benefit from inflation. They want inflation. Inflation's good for them. They get richer through inflation. How do they do that? They're able to borrow cheaply and invest in higher yielding assets. And so, the combination of those things make them richer, the sophisticated people at the top, but they leave all the rest of us paying for higher grocery prices. And so, it's incredibly unfair. One of my most depressing charts in the book is near the beginning, where it shows the percentage of the wealth in the United States owned by the top 1%. It's like 92% of the wealth. It's nuts. The middle class has just been eaten alive, and yet the rich keep getting richer. So, in my opinion, that would not happen if we were on a sound money standard, gold standard or Bitcoin standard.
Absolutely. I was just thinking that probably is the first time that I'm bringing that topic about Keynesian and Austrian economics. So you have talked a little bit about Keynesian, and I know this is another deep rabbit hole, but if you can briefly explain what is Austrian economics.
Yeah, the difference. Well, so John Maynard Keynes was an economist in Britain in the early 1900s. I think he died right after World War II. And he said something that really everybody in the government came to love, which was that when economic downturns occurred, it was the role of the government to step in and spend money and solve the problem. And what he said was kindle animal spirits and get the economy going again. And that, think about it from a government point of view, the governments loved that because that gave them the power to tax and spend the money. And if they couldn't tax to do it, they would print the money to do it. And it made governments more powerful. And then, of course, it made Keynes more powerful because he was a high-paid advisor to the government. So that kind of became his economic model. And to give him fair due, he also said, and then when the downturn is over, the government should cut back and run surpluses. Of course, that never happens. They just keep spending, and the surpluses never occur on the downturn, when things are going well. But having said all of that, what he did was he shifted, what was a free market system based on gold, and he hated gold, into a government-controlled monetary system based on, the government rules and fiat currency rules that allowed them to print money as needed and spend money as needed. And so that's the heart and soul of the Keynesian model. The alternative model is the Austrian model, which was originally founded by a guy named Karl Menger. And then he followed through. A lot of guys followed through on his work, von Mises and so forth, Rothbard, etc. What they recognized was that, this Keynesian model was wrong, that they were manipulating the currency, they were manipulating interest rates, and that interest rates really are just the cost of money, and they should be set by the free market. And that the booms and busts that the Keynesians were trying to smooth out were actually being caused by the Keynesians. And so, so you've got these two competing schools of thought. And if you look at historically all the evidence and what's happened, the Austrians have been dead ass right in terms of how they've predicted what would happen and then what happened. And the Keynesians have been very wrong about it. But, the Austrians get squashed in academia and the academic journals and by the press. And, the Keynesians have done a really good job of gaslighting us and suggesting that gold is evil and sound money is unnecessary and the Austrians are wrong and all these kinds of things. Because if they were ever to admit that we were right, we wouldn't need them and the government wouldn't have the power. They and the government wouldn't have the power that they have. So, what happened is kind of this group of economists and the government people, and then by extension, kind of the financiers, also came to realize, hey, this Keynesian stuff is great, because what it means is we can borrow at low cost, we can invest in high yielding assets, and if we screw up, they're going to bail us out. And that's what happened in 2008. 2008 was the GFC was just an enormous unfair event where, the guys who created the problem, who blew the bubble, got bailed out, and 1 year later they paid themselves $20 billion in bonuses, right? And meanwhile, the rest of the country, they were losing their houses, losing their jobs, getting hammered everywhere, left and right. So it was really a bad scene. The fact of the matter is that it was driven by relying on this broken Keynesian model. Look, they wrap it in really nice language, Juan. I watch, all of Jerome Powell's press conferences, and he comes out and he says, we're doing this for the American people. And I want to just scream at the TV and say, bullshit. No, you're not. You're doing it for the bankers, and for the government people. You're not. The American people are getting screwed. We're paying more money for groceries, period, because you're printing money. It's that simple. It's really not. This is not some incredibly complex thing. But they make it sound complex and they wrap it in language that supports what they're doing.
Do you know that something that is amazing that actually happened yesterday? I always post these clips about the podcast. So this week that we're recording, so the audience are watching the episode with Pierre Rochard. So I made a clip. I posted a clip on, I don't remember which platform, I think it was TikTok or something, that Pierre was talking about the difference about Bitcoin and how the system worked, right? And how Bitcoin erased the senior hash and something, and explain how Bitcoin is actually a fair system, right? That you cannot print, that is a limited supply and everything. And I got a comment that, and this is what amazed me and surprised me the most, so there are some people that I think that are millionaires that actually support Keynesian economics, and I was like, how can you support something that hurts you, exactly? Because this person actually commented like something like, because the solution is Austrian economics. So I was like, but Keynesian is not the answer,
Well, like a lot of people have been brainwashed. Yes, I make the same comments, and I hear, liberals and people on the other side of the aisle often come back and say, what are you talking about? The gold standard is a relic. It would throw us immediately into a depression. They've done a very good job of marginalizing and telling a story that benefits their side of the narrative. And what they do is kind of what happened in the U.S. on a lot of different things. They kind of say everybody else is a conspiracy theorist or a nut. If you believe in the gold standard, you're a nut. They call us gold bugs, like we're crazy. Well, the fact of the matter is that between 1789 and 1971, this was a pretty good country. We had our flaws all the way along and had to deal with them, and slavery and wars and so forth. And that was all on the gold standard. So and now it's like, oh no, that's all. Gold standard's horrible. Well, in 1946, we stood at the top of the world. And, we didn't have fiat currency. We had a currency that had a link to gold. So, I think, sadly, we're going to have to relearn that lesson, right? I mean, we kind of, somewhere along the line, the Keynesians came to win, and we went off the gold standard, and we're on fiat currency, and they were like, hey, look, see, it works. And it has worked with, with ups and downs and so on and so forth. But eventually, the math of it will eventually force it to not work. And I can't find it anymore, but there was a study I recall reading which showed that, fiat currencies like what we have now, that the average lifespan of them is kind of 40 or 50 years. And we're like at 52 years or 53 years since we went off the gold standard. It's the problems are getting larger, right? I mean, the GFC was a problem. COVID was a bigger problem. I think the next one's going to be even bigger still, and that's why I titled the book "The Big Print." I mean, we've had two big prints. We had one in 2008, and we had one in 2020, and we're going to have to keep having them. And the reason for that, it's just math. If you grow the debt faster than you grow the underlying GDP, eventually the GDP can't support the debt, and either the debt collapses in a depression-like scenario, or you print more money to keep the whole thing going. And historically, of course, what they've always done is they printed more money. And I believe they'll do that again, because even as bad as inflation is, it looks better than the whole thing collapsing. So, and politicians will choose inflation over collapse.
Yeah. Actually, I was listening a couple, I think, days ago to your interview with Danny.
Yeah.
And you said that you really think that it's coming soon, right? Cuando dejas tus activos digitales en un exchange o en custodia de alguien más, te expones a riesgos de terceros no deseados. A diferencia del sistema bancario tradicional, Bitcoin te permite tomar el control total de tus fondos utilizando tus propias claves privadas. Esto te permite ser soberano y esencialmente tu propio banco. Al tomar el control de tus Bitcoins, puedes evitar riesgos innecesarios de terceros. Almacenar tus Bitcoin en custodia de terceros como los exchanges puede exponerte a ataques de actores malintencionados, gobiernos o estafadores que lo único que quieren es apoderarse de tu dinero. Las billeteras de hardware aumentan la seguridad de tu billetera porque tus claves privadas se almacenan en un dispositivo especializado que no está siempre conectado al Internet. Como te he dicho antes, mantener tus claves almacenadas en un dispositivo en línea puede exponerte a factores adicionales de ataque, por lo que se recomienda usar una billetera de hardware al almacenar grandes cantidades de Bitcoin durante largos periodos de tiempo. Jade es una billetera de hardware no custodial para Bitcoins y Liquid que ofrece opciones de firma simple y firmas múltiples. Yo personalmente lo utilizo para almacenar mis Bitcoins, ya que me siento mucho más seguro manteniendo mis Bitcoins en una billetera fría que en una almacenada, por ejemplo, en mi teléfono. Si estás pensando en adquirir uno para ti, no olvides utilizar el código de descuento de nuestro show, BitCorner Podcast. De esta forma estarás apoyando directamente el show y además obtendrás un 10% de descuento para la compra de tu billetera fría. So I thought you were going to say like in a few weeks.
Well, I don't know about a few weeks, but
well, in a few months.
Yeah, a few months. I mean, it feels like we're in it. I mean, and I'll tell you why. The signal is the price of gold. I mean, it's
that it's going up.
Yeah, and fast and relentless. I mean, and so think about it. What takes to make the crisis is kind of an awareness. Currency really is based on trust. I mean, no matter what you say, At the end of the day, people have their own free will and they can do whatever they want with their money. When you trust dollars, you just hold them, and when you trust treasury bonds, you just buy them, and so on and so forth. And I think what's going on is, if you look at the U.S. fiscal situation, the U.S. government deficits, the U.S. printing of money, you come to realize that trust is misplaced, and the market's giving you signals of that, right? I mean, Bitcoin hit a new all-time high of 106 or 7 late last year, and gold is hitting all-time highs almost every day. To me, those are two very loud signals. They're like alarm bells going off, like, hang on, people are losing trust. The other thing that's going on that's interesting is the dollar, even compared to other pieces of fiat currency, because all currencies are fiat, the dollar's going down. So, and the dollar is the world's reserve currency still. That's slipping, but it is. The dollar at the end of the year was 109. Now it's 99. So, in one quarter, a little over one quarter, it's lost 10% of its value or so. Yeah, I mean, I see signs, and you're also getting some signals from the insiders. Like I think I mentioned this on Danny's show that you're seeing that the Federal Reserve was they were shrinking their balance sheet by what they call quantitative tightening, which is the opposite of printing money. They were doing that to the tune of $25 billion a month, and in the last meeting they cut that back to $5 billion. So I don't think they did that because they foresaw the tight monetary situation. They've also been floating some ideas. One is maybe opening up a swap line to some of the hedge funds that are involved in a basis trade, and that's complicated. But basically, the basis trade is these guys buy government bonds, and the big problem the United States government has is it's got a lot of bonds out there to sell, and that number is getting bigger every year because the deficit's not getting smaller. In fact, the deficit's getting bigger. And so, if the bond market gets to the point where it says, we don't want to hold these things anymore because we know you're going to print, then they're going to keep selling them. That's going to shove interest rates up. Higher interest rates mean that the government pays more for those borrowings. That means the deficit gets even bigger. And what I'm describing here, can you see how there's a doom loop here? So the deficit gets bigger. They got to sell more bonds. The bond market's a fixed size. Interest rates go higher. That means the deficit gets bigger. I mean, this is what I call an emerging market debt crisis. And we've seen these in other countries. We've just never seen it in the biggest country in the world. And so, when these things occur, I mean, if you do these policies that are emerging market-like, you get a confluence of outcomes. Let me just say that, it's very interesting to me what's going on right now. The U.S. stock market is going down, the U.S. bond market is going down, and the U.S. currency is going down. All of these things are very common in countries that are having currency crises. You saw these things in the tiger countries. You saw them in Mexico at one point. You saw it in South America. You saw it in Venezuela,
Argentina.
Yeah, this implies that what's going on is these currencies are in the process of unwinding and failing. I mean, it's the world's reserve currency, right? So it's going to take some time. I'm not saying this happens tomorrow, but it's clearly a trend. And I think I probably said on Danny's show, I mean, I think by the early 2030s, maybe 2030, 2032, we will have transitioned to a different currency system because this one will have kind of fallen apart. It's certainly going in that direction. So, how it goes along that path, I mean, I don't know. It's going to be bumpy for sure.
Okay. That's another thing that I want to ask you now that you mentioned a little bit the context about the US. What Trump actually wants in this administration. And just let me give a little bit of context for people about what is a tariff, or at least what I think is a tariff. And I think and you will correct me if I'm wrong, is a specific leverage that can be pulled by a politician that essentially will be a tax on a good, right, that is imported into the country. So let's say for the UX, for example, a lot of things that you buy are manufactured outside the United States. So if you're a politician that you want to encourage from US manufacturing, or you want to encourage to buy from the US, right, supplier. So what they do is to add a certain percentage of a penalty for buying to someone outside of the US, right? So the US supplier costs, let's say, $10 and a Chinese supplier costs $5. Then you add a large tariff to China, so that when you buy China product is actually more expensive than the US. So now you go and switch to a US supplier, right? That's, I think, the goal of a tariff.
Yeah. So what does Trump want? Well, that's complicated, and I'm not sure on any given day he knows what he wants, but having said that, what he recognized and what his advisors recognized, and they're correct about, is that China has been a mercantilist nation. What does that mean? It means that they have sold things to us in large quantities and held prices down in an effort to grow their economy. And then they have not reciprocated in terms of buying things from us. I mean, in a bilateral free trade world, they'd be better at doing some things, we'd buy from them. We'd be better at doing other things, they'd buy from us. Well, they forgot that they buy from us part. They kind of, they make it impossible to buy from us. So as a result, what they've done is they've hollowed out our manufacturing base, and they've grown quite wealthy. And we've run a large trade deficit, which for a long time we were able to do easily because we could sell. The people who had the surplus would take that surplus and invest it in our treasury bonds. But that stopped in 2014, the growth of U.S. treasury bonds being sold overseas. And so, Trump and his group have decided to reverse that process, which some people have described as Triffin's dilemma. It's the curse of having a neutral, of having the world's reserve currency. In order for the world to get your dollars, you need to run a trade deficit. And trade deficits aren't good because, as I say, they hollowed out our manufacturing capabilities. And so they've decided to reverse that. Now, whether they did it in the most graceful way, I can argue they probably didn't. But they decided, as in Trumpian style, he figured, well, if I'm going to do it, I'm going to do it in a big way. And so he kind of went nuts.
Yeah, definitely.
Right, declared war on China and then started escalating everything else. Now, it's interesting to note, of course, they backed off because when he did it and he ramped it up, the bond market started to fall apart and the stock market did too. At one point, the stock market was down 20%. And at one market, the yield on the 10-year bond had shot up very dramatically. And so that was when they came in with the 90-day pause on the tariffs. And so now they're reevaluating and negotiating, and who knows, at the end of the day, maybe there will be no tariffs. I don't know. But I think, what Trump wanted to do was he wanted to break the glass and get the conversations started. And he certainly did that. Yeah. Now, like I say, whether that's the right thing or not, it's unclear. What I think is going to happen, though, unfortunately, is that, by breaking the glass, he started a process of this bubble, this overall stock and everything bubble is going to deflate. And as that happens, as stocks come down, bonds come down, rates go up, money gets tighter, that's going to force the Fed into the big print. They're going to absolutely be forced to drop rates, print more money, because if they don't, they're going to have a depression. So, and one could even argue, as you know, probably a lot of your listeners know, Trump and the head of the Federal Reserve have been clashing. Trump's like, lower rates now, Powell, and Powell's like, no, I'm not doing that. But one could even argue that the Treasury Secretary Bessent said, don't worry, sir, we'll just get it a different way. If we tank the markets for a while, that will put us in a condition where the Fed has to print. Because one thing we didn't talk about earlier in your conversation, our conversation, was the Fed has two written mandates, right? Mandate one is low inflation. Mandate two is employment. They have a third unwritten mandate. I talk about this a lot in the book, which is what I call financial stability. And, if the markets start to malfunction, i.e. if the stock market falls a lot or the bond market falls a lot and interest rates go up a lot, the net effect of that is the Fed comes to the rescue. They've always done it historically. So I think, whether Jay Powell wants to cut rates or not, I believe that as the markets continue to play themselves out this year, you're going to see a situation where he's forced to change and print money. And they're in the title of the book, The Big Print. So I think the big print is coming. And I'll go a step further. The last couple of prints were big, but increasingly big. Like Bernanke printed $3 trillion over 3 years. Powell printed $5 trillion over 18 months. I think the next one's going to be bigger. So, and ultimately inflationary, which is, again, back to why you want to hold things that the government can't print.
Absolutely. Yeah, because I was thinking that they were trying to do this to devalue the price of the dollar and suddenly, but I don't know if it...
You're absolutely right. There's no doubt they want a lower dollar. Absolutely.
But it's because they want to go to eventually to a monetary reserve because, Luke Grumman recently suggests that the U.S. may revalue gold upward, right? And use it to settle the debt.
Luke's brilliant, and that's right. And they probably will have to do that. I think, but yes, big picture, when you've got a situation where you've got too much debt, think of it like a family with, huge credit card debt and not enough income to service it. You've either got to, fail and go bankrupt and declare the debt worthless, or you've got to work something out with your creditor where you're going to pay it out over time and they're going to give you a lower interest rate so you can afford to pay it. And that's kind of what has to happen here. The debt's not money good is the bottom line.
And another thing that I want to ask is that because there's a section in your book about it, and I'm interested that how the governments manipulate the price of gold? Because I'm asking this because do you think the price of Bitcoin is also manipulated? Because sometimes I have read on Twitter that people often feel that the price of Bitcoin feels super
really good questions. Well, the government clearly manipulates the price of gold. There's years and years and mountains of evidence to show that. They recognize that gold competes with their fiat currency. Guys like Paul Volcker, when he passed or before he passed, he wrote his memoirs and he said one of the mistakes they made in the 70s was not manipulating the price of gold more. So, it pretty much admitted that they did. They've been doing that, and think about it, from their point of view, they have to do that, because if gold goes to the moon, then their fiat currency goes to zero. So they don't want that to happen. To your more important question about can they and have they manipulated Bitcoin, I think the answer is probably not. I think there might be a little bit around the edges, but they've had a long time. We've been off the gold standard for 50 years. They had a lot of years and a lot of mechanisms to coordinate to manipulate the price of gold. And Bitcoin came along so fast and it happened so quickly. And you can see where the Bitcoin is. I mean, one of the things that really aids them in manipulating the price of gold is that there's no proof of reserves. I mean, you don't really know who has what, and there's a lot of paper gold. Whereas in the Bitcoin case, we can all see what's on the blockchain, and there is proof of reserve. So and I would say one other thing makes the Bitcoin somewhat less manipulative. I mean, so they haven't had as many years. They haven't had the processes in place. I mean, I'm pretty sure when Bitcoin exploded from 10,000 to 50,000 in 2019, 2020, or whatever, alarm bells went off in every single central bank in the world. They're like, holy shit, this is a problem. And they started thinking about how they could manipulate it, or if they could manipulate it. But it's really tricky. I mean, in the gold case, what they did is they used hedge funds in the Cayman Islands, and they probably did off-balance sheet things where they printed the money necessary to sell paper gold. And if they took a loss, so be it. They could just paper it over with the printing press. It's a lot harder to do that with Bitcoin. I mean, if you have an asset that can go up 5x in like 6 months or a year, and you sell it short, well, the losses you take are going to be really large. And so and hiding that is going to be harder. So I'm not saying there won't be paper Bitcoin. I think it's a risk, but I think that based on what I've observed, the size of the futures market for Bitcoin, the size of the derivatives market, I mean, there's an enormous futures and derivatives market for gold, enormous. And so they use that to manipulate the price. The size of the futures and derivatives markets for Bitcoin are tiny compared to the total supply. So as I say, I don't think they've done it yet, but it's a risk. I mean, it's certainly a risk. But I think Bitcoin's going to overtake things so quickly, they're not going to really figure out how to do it.
Okay, awesome. You mentioned also about that because they need to audit the gold. And Elon, a couple of weeks ago, mentioned that he wants us to audit Fort Knox. Do you think it's likely? Possible?
Yeah, this is a favorite topic. So there's a lot to talk about here. So they get in there and they say, okay, we're going to go to Fort Knox and we're going to audit it. I mean, Trump says it, Basant says it, they all say it, right? Elon says, okay, great. Well, have you noticed
live stream?
Yeah, right. Have you noticed how quiet they've gotten on that whole topic? I mean, it's okay. So, and those of us who know, so my view is that there's no doubt that Fort Knox has been somewhat raided. I mean, there's gold there. Don't get me wrong. It's just not all there. Okay, some piece of it's been raided, and so
yeah.
And I think the evidence shows that in the Johnson administration they shipped it to, London to help with the London gold pool. But setting all that aside, my sense is what happened is these guys. I mean, Treasury Secretary Scott Bessent has said, look, we want to, a monetary reset may be necessary, and I want to be at the table when it happens. He said that last June.
Yeah.
And he was a big gold guy. So I think he kind of understands the underlying problem. So when they got in there, and I'm sure he's talked to Trump about, hey, sir, look, one of the things we could do is return to a gold standard. That'd probably be a good thing to do. And so they all kind of talked about, yes, we're going to audit Fort Knox the day we get in there. Okay, great. And an audit's not hard to do, by the way. I mean, this is not, this is, I don't know, less than 100 people in less than 30 days. You could just go through and count all the bars or say them and it's over. And of course, now it's gotten all very silent. My sense is what happened is they got in there and Bessent did some work and he got kind of read in by the CIA or whoever controls that site. So, you guys do realize we don't have everything that we say we have. And so now they've gotten kind of quiet about it. In fact, the conspiracy theory is there's been all this gold being shipped from Switzerland and London back into the United States. And the thought has been, what, maybe this is these guys trying to refill that the stuff that was taken. I don't know. I don't know if that's true or not, but my point is that, again, and this is one of the problems with using gold versus using Bitcoin. You don't know who has what, right? So, it's going to be very interesting to watch. And if Trump and Bessent don't come up with a Fort Knox audit within a year or 2 years' time, I would imagine other countries would kind of say, why? And they would start to have the same suspicion that I have, that maybe it's not there. And very interestingly, as you probably know and your listeners probably know, China has made a big bet on gold. They have a lot more gold than they say publicly. And the reason we know that is because we can trace the imports that they have from Switzerland into the country. So, and we know China is kind of Bitcoin hostile because they threw all the miners out a few years back. China, I think, is, all countries around the world can look at the monetary system and they know, hey, this is broken. It's going to reset at some point. And so, China, Russia, others have made a bet on gold, which is the argument for if the United States wants to leapfrog them, we should make a bet on Bitcoin. And Bitcoin is sounder than gold. The stock to flow is lower. So, I think that's kind of, hopefully that's where we'll go. And obviously with the strategic reserve and with the Lummis bill and others, what Saylor's saying and, what the Bitcoin Policy Institute is doing, we will figure out that the smartest way to approach this is actually just to skip the gold step and go right to Bitcoin.
Absolutely. Now that you mentioned China, I think it's the perfect moment to make a segue because I told you before starting the podcast that I have this little game that my previous guests have a question for my next guest. So now is the time. So my last guest was Roger Juan, that I'm sure you know. He's the author of the Bull Mao Whole Bitcoin. And so, we covered a lot of topics about China, and he made a question for you. And by the end of the episode, I will let you know who's my next guest, so you can do a question for him.
Sounds great. Yeah, sounds good.
Larry, I know you've come out with the big print, and you talk a lot about the effect that printing the U.S. dollar has had on the American people, right? I think in a recent podcast, you kind of described your perspective as, the angry American. I wonder what you think about the effect the U.S. dollar has had worldwide on other peoples, including Argentinians, Chinese people, Iranians, and other people in the global financial architecture. What are the effects of the big print on all of us around the world?
That's a really great question, and I think it's had equal impact. And of course, I write from an American perspective because I'm an American and I vote here. I'm trying to, want to see this country be better for my kids. But I think it's had equal damage and maybe even worse on some of these other countries. I mean, by being the reserve currency, we've been able to have the largest military. That military hasn't always behaved in an honorable way. If you read the history of the CIA and a lot of things we've done, we've exported our inflation to all of these countries. We've used it as a way of, in a sense, stealing some of their, valuable commodities and underpricing their valuable commodities. The book Confessions of an Economic Hitman is a good book to read to kind of, review how that has taken place. And it's a great question. I mean, I think it's had a very deleterious effect on everybody. I mean, sadly, the U.S., in my view, has misused its position as the world leader. I mean, in 1946, after World War II, the U.S. was clearly just the only leader in the world. I mean, Russia was still there, but we were so far ahead of them.
Yeah.
And we had a position of power and prestige, and our industry hadn't been ruined by the war and so forth. And so, sadly what happened is we misused that position somewhat, and we did things that didn't necessarily, serve our interest in the long run and were bad for other parts of the world. I mean, take, for example, the Middle East. We wasted $8 trillion on wars in the Middle East, and a lot of people died in those wars. And for what? I guess probably to try and secure some oil supply, but, the weapons of mass destruction turned out to be a lie. And, there was just a lot of stuff that we did that was not in our best interest or in the world's best interest. So I think sadly, everything America does has an impact on everybody in the world. And because American policies have not been what I would call enlightened in terms of monetarily or militarily, I think the whole world has suffered, and it's really sad. It's unfortunate. But that's the bad news. Okay, let's try and I don't want to be a doomer. Let's try and view the good news, and that is to say that this distributed information that the internet brings us, and now this distributed money that Bitcoin brings us, we actually have the fix to the problems of these large centralized governments having too much power and abusing it. Because we can now all talk to each other all around the world, and people can get their news from alternative sources. And, the big, powerful governments, they're on the run. 80%, I just saw a poll this morning, like 80% of the people in America think the U.S. government's corrupt. I mean, that's not good if you're in the U.S. government. And so, now we haven't solved for it yet, but guess what? We're going to. If when you get that kind of consensus, believe something, and then you have a crisis, I think we're going to fix some of these problems. But it's a great question, and I'm very sympathetic to the impact, the bad impact that the U.S. behavior has had on everybody. I don't talk about that much in the book, and I'm not, the book is just, as I say, I'm aiming at a U.S. centric audience because I think that what I hope for the book, just so you know, I hope it really goes viral. I hope it spreads wide. We got 300 plus million people in this country. I hope a lot of people read it. And then I hope what happens is we actually get a political movement which says, hey guys, we got to go back to the Constitution. We got to end the Federal Reserve, and we got to return to sound money. The things that a brilliant politician here said years and years ago, and I supported him, a guy named Ron Paul. If we'd listened to him back then, we'd be in much better shape today than we are. And, and there were a few of us who followed him, and then he got some votes, but not enough. And, what I'm hoping is that as this, as what's going on now gets further and deeper and becomes more pressing, that, more and more people do things like read this book and understand what the issue is. And then more and more people will stand up and, some politician will come along and say, hey, here's what we did wrong. Here's how we're going to fix it. Here's a return, and they'll win and we'll fix it, right? And this fourth turning will be over, and we'll have a very bright future for my kids and someday my grandkids. I mean, that's kind of the hope, right? That's the dream of the book. And of course, it doesn't just apply to the U.S., though. It applies to the whole world.
Yeah, that's what I was about to say, because me not being American, but knowing a bit, reading your book is it's really insightful, because there are some things that I knew, but not in deeper details. And now that reading your book is okay, now it makes sense. When you have small pieces of the history of American
a lot of
history,
people, a lot of what's in the book has been said before, but I tried to pull it all together and make it a story that was easy for people to follow and go, oh, I get it. And the goal was to have somebody read it and go, oh my goodness, now I see what's going on. And rather than listening to, Team Blue saying this or Team Red saying that, they're both in favor of fiat money, and that's bad. It's the money that's the problem, not this other stuff. Let's go fix the money, because, we all have the Bitcoin phrase, right? I stole it from Marty Bent. If we fix the money, we fix the world. I mean, it's at the core of a lot of the problems, right?
Absolutely. We're gonna start wrap it up probably. If it is okay, I'm gonna ask you 3 more questions, because I want to ask you about El Salvador.
I'll go for as much time as you need.
Okay, because I would like to ask you about El Salvador. I didn't know that you have been there, but I want to ask you about that. So if you can share your context.
My brief reaction. So Big Sean, a good friend and a great guy, threw the halving party down in El Salvador. And he invited me to attend, and I did. Preston Fish and myself and a bunch of others went down to it. And it was fantastic. And I was really impressed by the country, really impressed by the people, how friendly and nice they were. Sadly, I didn't get to Bitcoin Beach. It was where the event was held up the coast a little bit. Okay. Just from a timing perspective, I couldn't get down to Bitcoin Beach. I also didn't get to Berlin or whatever, where there appear to be a lot of Bitcoin. I met some of those folks. It was incredibly helpful, and I've become friends with Max. I was on his show way back in the early days, and Stacy.
I saw that is forward the book.
Yeah, exactly. And Max was kind enough to write a forward to the book, and so. And as you know, he's an enormous El Salvador bull and a huge supporter of the President Bukele, et cetera. And
absolutely,
I love everything they're doing down there. I think it's brilliant, and I do think it's going to become a beacon of shining light in the future. But like all things, I mean, it's a project and it's got a ways to go. I mean, it's still, I don't think the average El Salvadorian is using Bitcoin either.
No,
I mean, we've got these little pockets of development, and they're going to spread, but it's I mean, just as in the United States, I don't know what the exact percentage of the U.S. population that owns Bitcoin is, but it's not very high yet. It's still pretty small, so it's got to grow.
Yeah, actually, that's why this podcast exists and all the,
there you go. There you go.
Yeah, and now talking about more than your experience there, I would like to know, someone outside from El Salvador, how do you see everything that El country is doing? We're the first country that about, let's say, well, not about entirely, but dollar system by holding Bitcoin as a strategic reserve. What is your opinion in general about it?
It's brilliant. It's absolutely brilliant. I mean, look, I mean, they were the first country to adopt it as a neutral reserve currency or as as legal tender, and they've been stacking it. I love the way Bukele. IMF says, hey, stop doing that. We're not going to give you a loan. They give him a loan. He takes the money and uses it to buy Bitcoin. I think it's great. I mean, because I don't think the IMF is a very good institution. In fact, I think it's an evil institution.
Yeah.
Look, it's everything they are doing is absolutely brilliant. There are challenges on a go-forward basis.
Yeah.
there are challenges everywhere in the world. And what we're talking about here, changing the nature of what is the neutral reserve currency, that's a big deal. It's a very big deal, and it's not going to be smooth for any of us or any of these countries, but it's inevitable, in my opinion. I share Saylor's view that, this just will happen. And I think that it's one of those things where the early adopters will be rewarded compared to the people who are late in their adoption. And so, that's why I wrote the book. That's why I pound the table so hard for everybody to just get some Bitcoin. Doesn't matter how much, just get some, get started.
Yeah, absolutely. Another thing that I want to ask you, that actually I saw it, I think today in the morning, but I think it happened last night in America. There was a tweet from, I don't remember which one, but it was something about the Fed, that it says that just withdraw the guidance on crypto and tokenized dollar.
Yeah, isn't that interesting? Yeah, I saw that too.
Yeah, that's...
And basically, Saylor retweeted it. Said, "Yeah, now the banks can do whatever they want. Now, whether the banks will be smart enough to adopt it and start using it is unclear. Some will, some won't. But yeah, I think in general, we live in a Bitcoin-friendly environment now in the United States. To me, it's really kind of stunning. I remember very clearly with a lot of friends talking about Bitcoin, and they kind of understood the idea, but they said, well, the government's going to shut that down. They're not going to let you have a currency that competes with a dollar. And then along came, in January last year, along comes the ETFs. It's like, whoa, that's not the government shutting it down. That's them allowing people to buy it. And then, Trump gets elected, and now we have and Warren had her anti-crypto army, but Trump gets elected, and now we have a Bitcoin strategic reserve. And so now the Fed is saying they're not going to be touching what the banks do. They're going to let the banks do it. And and then some big thought leaders in finance changed their views on it. Probably the most important one in my view was Larry Fink, who runs BlackRock, which is the largest asset manager in the world, and was very Bitcoin negative. But he was then smart enough to understand what it is and realize, this is going to happen with me or without me. I better get on the right side of this. And so now he's become a Bitcoin bull. And even in his last annual report, he talked about how there's a theory under which it could become the reserve currency. I think he gets it. What I see is just a continual trend in the United States in favor of Bitcoin. I don't know where the Loomis bill stands. I don't know what the odds are of it passing. They used to be quite low. I think they're growing. But you've got Eric Trump and his father, are Bitcoin bulls. You've got Lutnick, who's, Secretary of Commerce, and he's a raging Bitcoin bull. And you've got Besant, who said he's positive on it. He's more of a gold guy, but this is all very positive stuff. The only caution I would add, though, is that the blue team is still out there. And let's say, for example, there's a scenario where in this 4 years things don't go the way we want, and 4 years from now, the red team loses, and J.D. Vance is not elected as the next president, but somebody from the blue team is, AOC or whoever. And that team is very anti-crypto and very anti-Bitcoin. And so we could see the pendulum swing the other way from the government, where they could come back and say, well, we're going to tax this, we're going to grab it, we're going to do whatever. And I don't know that that'll happen. I hope it doesn't, but it could. So it's in a democracy that changes. The House changes every 2 years, and the presidency changes every 4 years. We're in a good environment right now, but there's no guarantee that's going to continue. So I would just offer that warning. And I think that's why, for now you're fine, but I think longer term, these ETFs are potentially honeypots that the government could grab. Whereas if you own, your crypto and your Bitcoin in self-custody, it's going to be a lot harder for them to say turn it in. They'll say turn it in, but you can kind of thumb your nose at them and say, well, I lost it. I don't have it anymore. It's a boating accident. I think that's actually important, if you think through the politics of where we might go.
Absolutely. I just have two more questions. One, it's really interesting that I was, sometimes I just bookmark some
Sure.
tweets about everything, and I saw one that I had booked for a long time that it was really interesting. It was an interview that Bukele had with Tucker Carlson, and they were discussing a lot of topics about El Salvador, but also something related to the U.S. And he's the Federal Reserve, and he says that the Federal Reserve is not federal at all. And they have no reserves. And it's amazing. So I just want to know your opinion on that. For people, half of my audience are in El Salvador, other half are here in Europe, and some of them are in the United States, but not all of them knows exactly the
Yeah,
work what the
just
federal.
quickly, to go from very basic first principles, the Federal Reserve is a funny beast. It's kind of this quasi-government agency. It was established by Congress in 1913 to supposedly, in an independent manner, of course it's not, control the monetary system of the United States. And it's actually technically it's owned by the banks. It reports to Congress. The members of the Federal Reserve Board are appointed by the president to long terms, and they're supposed to be. They claim to be independent, but they're really not. And it controls the policy decisions, particularly surrounding interest rates and quantitative easing, and it controls the monetary system. And of course, as I pointed out in the book, it's done a terrible job of doing that for 100 plus years. It's getting worse. So yeah, I mean but they dressed it up by saying it's federal, even though it's really not. It's a reserve, implying that there's a bunch of money there and in reserves, but it's really not. It's just a paper tiger. So it is an organization. It is really kind of a banking cartel designed to protect the banks and to protect the wealthy, and it does a pretty good job of that. For those guys, they win. For the rest of us, it prints money and makes our groceries more expensive. That's the simple description of what the Fed is.
Awesome. And my last question is for anyone that is listening, either American or here in Europe or Latin America, what should we be doing now because we have discussed a lot of the problems, but the solution, actually, this is really interesting that I discovered in your book that you used to be a gold bug, but then you switch out to pivot to Bitcoin, right? So any advice that
so as I've described, the underlying thing that's broken is the money, and it's fiat currency and the printing of fiat currency. And so we need to solve for that, and there are two possible ways of solving. As Grumman points out, they could reset things in terms of the gold price, and gold's been around longer and it's a bigger market and so forth, and so there's a chance they'll go in that direction. But the other solution is to reset in terms of the Bitcoin price, and I think there's a good chance we'll go there as well. And maybe it's a two-step thing. Maybe we do gold first, then Bitcoin. Who knows? But we need to do a monetary reset. The money is broken. They can't stop printing it. Inflation, what's going to happen, just to map this out, is, in my opinion, inflation is going to get worse. It's going to get so bad that people are going to be screaming about it. And then hopefully some politicians are going to step up and say, hey, this is really bad. We got to fix this. And they're going to have a proposal to take us back to the gold standard, to take us back to take us to a standard, or some combination of the two. And if the pain is large enough and enough people are aware that that is the correct solution, it'll happen. I mean, that's it's just that simple. Now, it's hard to envision that today because we're not even close to that point yet. But that's how I see things unfolding, and that's why I say I kind of give it what are we, 2025 right now? So I give it maybe a 5 to 7 year time frame for that taking place, because I think the problems are going to continue to compound.
All right, Lawrence, thank you very much for your time. Thank you for being on the podcast.
Oh, thank you, Juan. It was really nice speaking to you. I enjoyed it a lot.
Yeah, thank you very much. As I told you, I have a bunch of questions, but I hope to have you for a second episode.
I'll come back. Yeah, sure. No problem there.
So thank you very much, guys. Stay tuned for next week, and I hope that you have enjoyed this one. And if you do, don't forget to like, subscribe, and everything that all the algorithm asks for. But just share it with your audience, with your friends and family. All right, see ya.